Hello, Peter. How are you? Thank you so much for taking time out of your day to be with us. I'm really looking forward to hearing and seeing your views, and I'm making you the presenter right now, buddy. So like the old TV show, The Outer Limits.
Okay, can you hear me?
Can hear you, Peter. So like remember that TV show, The Outer Limits, where you were sitting in front of the TV and it said that they now had control over your TV?
Okay, and, so Dale, I'll agree I'm old, but you didn't have to point it out that way.
Well, you know, we were just children when that was running, right, buddy? So yeah. I'd like to introduce you to the community, Peter. You're one of the most, you know, intense students of market history that I've ever interviewed or talked to. You know, Peter will send me an email. He's flying to New York to read the original manuscripts. Who do you go see? Who's the dead guy you went to read in New York, Peter?
Dr. Raymond Wheeler.
Okay, Wheeler, right. And I read Peter's stuff, and right now, Peter, my pineal gland is pretty aggressive right now. I don't know if it has to do with the solar activity lessening or not, but you know, every time I read you, I go, wow, you know, this guy is really a student of everything. So thanks so much for taking time out and joining us today. And I know you're talking about your look here in the S&P is that we're in a wave 4. And why don't you just take it away and tell us what you're seeing and what you're expecting. I know what you're expecting long term, but the idea is to survive the short term so you could be there for the long term.
Right, and yeah, that's the big question, because the market's right now today a little bit all over the place, but it is going to be because we're in a triangle at the moment. So, you know, you said to me, you know, I can talk about anything. I was sitting last night just kind of thinking about the S&P 500 and how it relates to the dollar and the euro, and measuring the lengths of the waves in terms of time. And I think the bigger picture, and maybe I should start there.
This is what you talk about quite often as well. It's all one market.
It's all one market. Everything, and even gold and silver now are starting to move with the U.S. market. It's really quite extraordinary. But, you know, Robert Prechter came up with this years ago in his book. And he talked about at some point when we get very close to the top, everything's going to start moving together. So I see the U.S. indices, and of course you can go across the pond and you can see that the DAX and the AEX and all of these are topping out at the same time as the U.S. market is. But I'm seeing the euro, I'm seeing the currency pairs, the U.S. dollar currency pairs moving with the U.S. market now. And it's all the deleveraging that's going on, and we're getting very close to a top, and the whole world is moving as one. And as we reach the top, and I'm going to talk about, I thought I'd talk about that today to give you an idea of how I see these things aligning. But as we get...
So basically, you're looking like the cable has taken the lead against, you know, the dollar weakness. You're looking for the euro to do the same. Basically, dollar weakness with the blow off in the S&Ps to complete.
Yeah. So here's, for example, the dollar. This is a daily of the dollar. Okay. So this kind of sets it up, and the long range. I mean, if I back this out, my numbers are going to move around on the screen. But here's our dollar, and it had a great big sort of. This is all corrective to my eyes, but it had a 5 waver all the way up to January the 3rd here. And I really want to talk about what's happening in this area here, because we are heading back down to 92 in this area. And I just wanted to talk a little bit about the timing there, because that aligns with what's happening with the euro, of course. It's the exact opposite chart. And right. So what is happening with this, and from an Elliott wave, I'm strictly Elliott wave with cycles in the background. And so if I look at this chart, very early on, I call this as being a corrective wave because it's 3 waves up, and you see an A, B, C here, and this wave here from an Elliott wave perspective does not have 5 waves. it has 3. So this told me that this entire wave was going to retrace right to the bottom at some point. And it has been doing this. So I called the top, and now we've got a first wave down, second wave, and we're working our way down to this previous low. This bottom here, which is a fourth wave, started, or rather turned at May the 3rd, 2016. And then we had a top January 3rd. Well, that's almost exactly 8 months. Well, it is exactly 8 months, which is pretty amazing. So if I measure this and I say, well, it should retrace from an Elliott wave perspective in somewhat the same length of time. So that takes us 8 months, takes us to September the 3rd. And that is my sort of take on the dollar. That's where I believe we're going. And I also think this is going to be the top of the U.S. market. And I'm going to get to that shortly. But if I go then over to the euro, and I'll do the same thing, a daily chart of the euro, here it is. It's almost a complete mirror image. And you can see that, yes, we were in a triangle, but we've broken out of that triangle with the election here. That's good old Donald Trump right there. That spiked down. And we've come down in 3 waves. It's an A, B, C, and 3 waves. And in fact, you can go right back down to here, and you can see I've got this as an A, B, C, which is 3 waves, and that will retrace. So my target is 1.16. I noticed you mentioned 1.15 a little bit earlier. So I have the euro retracing because of 3 waves, just like the dollar in the opposite direction. And I believe we're going to hit 1.16 up here, and we are going to turn down and have the mother of all fifth waves.
Interesting.
Okay, so so those two align. So now we go over to the S&P 500. I just got to figure out where I hid this chart. Here we go. So here's a daily chart of the S&P 500, and here's our 4th wave down here, and we're in this 5th wave, which lo and behold, and not very many people have it labeled this way, is a corrective wave. It is what we call a zigzag. So it had 5 waves up here, an A, B, and it has, we're working on our 2nd set of 5 waves. A zigzag is 5 waves, 3 waves down, and then another 5 waves. And this
so is this the ending diagonal pattern that you're talking about that started from where we have 1 and 2 labeled and will complete at new highs up there? That's going to be the ending diagonal?
Well, it's not an ending diagonal. It's which is an Elliott wave pattern. It's really a wedge, which is just a technical analysis pattern.
Because I know for a while you were looking for an ending diagonal, and there were actually some Elliotticians that said at the end of 3 that you have labeled there was an ending diagonal.
No, because the 4th wave has to overlap the 1st wave. Here's our 1st wave. The 4th wave would have to come all the way down here, and it's not. We're in a triangle right now, and because this is corrective, normally the 4th wave would retrace 38%, but because this is all corrective, there are no rules. It's going to have 5 waves, but in terms of retraces, and I think this is what a lot of people are missing, it can do virtually anything at once. So we're in a 4th wave. I have this as a triangle that we're in, triangle pattern right here, and we are just about ready in the next couple of weeks to go into our blow-off 5th wave, which may be an ending diagonal because this whole thing is correct.
And so, that would take you out to September as well, above 2,500.
Well, yeah, because if I look at the ES, which is the same pattern here. Here's my A, B, and my 1, 2, 3, 4, and the 5. You can see how I've labeled this with, this is a combination wave in the 4th wave. We've actually got something called a flat here, and then we've gone into a triangle. And so the triangle should end in the next couple of weeks and head up. But if we look at the timing of this, wave 1 was 2 months in length, and it went up to just about this point here. And then we came down. I have this, I should move this over. But then we had an ABC down, and that took us 2 months as well. We had a 3rd wave up here, 5 months. We had a 4th wave. This is going to look like it at May the 1st, say 2 months. And so you're looking at a 5th wave. It should not be longer than the 3rd wave, but let's say that it went 5 months, or sorry, 4 months. That would take us to the beginning of September. So you're starting to see the U.S. market and the euro and the dollar pointing to the same place in terms of time, and also an end of their waves at the same time. So that's kind of what I'm looking at in terms of the market. Everything seems to be moving in that direction.
And I do remember last year, to your credit, once we took out, I believe it was 2070, you started talking about 2400, 2500. That was over a year ago, right? What would make you wrong on this scenario? Is there a price level, like a bull or bear line in the sand, that would tell you something else is happening and that the top might be in? Even though I agree with you, it looks like, you know, we had a confirmed high at the high, so another high is likely. And you say a wave 4 could do anything. Could wave 4 retrace to 2100?
Well, it could. Then you would have an ending diagonal if it did that, because we're rated here at that point. It can't go past. If it went past the bottom of 2, then you would have to say, well, it's all over. But I have, and even going into the Elliott Wave Principle book, I've gone through all the charts in there and gone back and looked at them. I have never seen anywhere a truncation. Each one of the charts there that points to a truncation is incorrect. So Bob Prechter did a lot of those charts sort of in the middle of the market as it was moving. And some of them are second waves, and they're not truncations. So I do not believe in truncations. I've never seen anything that did not do 5 waves, unless it's a corrective wave. But this is a zigzag. It has to do one more 5th wave up. I don't, you know, but right. if you say what would be my bottom line that I would say something's wrong, well, obviously if it came down below 2080, 2078, 2080, somewhere in there. Okay,
and it's at 2427, some type of fib extension. How did you come up with that number, that white horizontal line you have up there?
I don't know.
Okay.
I probably just moved it around, and I probably had it up. I think the top may be sort of 2500. Usually what I do is I take a fib off the A wave, and there's a couple of places you can do that. I can take it off this first wave, and it's sort of pointing to 2550, or I can take it off this A wave here, and it's pointing a little higher. I'm not sure we'll get to that, but I'm looking at around the 2500 range possibly. The other thing is that when you get, as you know, when you get into these toppings, typically the waves start to get a little more compressed, and so we may have a 5th wave that does not get as high as people think it's going to get. It may just compress a little bit and only go up to 2500.
You were right on gold last year, Peter, and then after this big pullback to 1120, I saw you positioning yourself there too. I think you're looking for, you know, something like 1600 on the gold, and would that be the September time frame too?
Sorry, on which?
On gold. Your timing, you know, and why has the gold been easier to forecast than the S&P? Do you think it has anything to do with central planning?
I think because it's gold moves a lot slower. I don't know. I don't find it any easier or any more difficult. I think gold is coming down. It certainly looks that way today. I was looking at it a little bit earlier, the subwaves. Silver certainly has. I think we're going to see a double bottom here on gold. Okay,
so there's going to be another opportunity to recommit going into the summer. Okay, so that's a new look for me from you. Okay, I know you liked it down there at B at the beginning of the year, and I know you liked it at the end of the year of 2015, and you know that was a great call. And your overall look, I think there it is, your 1600 level that we pull back into June, and then we have C up to 1600, and then eventually you're thinking we go down to 750. Is my memory serving me correctly here?
That's correct, because this is an ABC correction. So you've got a big A wave down here. You're going to have a B wave up to the 62% level. It's about 1600. Okay. And then you're going to have a big C wave that should take us down to the previous 4th, which is 730.
So, you know, once we get towards the fall, Peter, it doesn't look like there's going to be much to be long except the dollar. And
gold, you'd want to be long gold, because I think as we that's the other reason I think that this is coming down, just from a pure fundamentals perspective, is that, or maybe
the market has another wave to the upside. Gold has another break.
That's right. The market is going to go to the upside and have its blow-off wave. And so that would tell me that gold is going to come down. And then when it reaches here, of course, the market will turn and gold will head up. And so that's what I see. And because a lot of these things end up being, we're going into deflation. And so the U.S. dollar going up is deflationary as it becomes valuable. And so I see gold will do the same thing. It will head up as well. So it'll go up into the nether regions here. And then people start to sell their gold at some point. You know, talking about fundamentals and what people do. Governments start selling, everybody starts selling as they have to pay off debts as the market comes down, and that's why you're seeing a great big C wave that's going to come. But it has to go in an ABC, and from an Elliott wave perspective, you always retrace to the previous fourth wave, and that's at $750. So it's just basically a wave.
Okay, and that looks like what, June of maybe, okay. We're going to get the poll. I've got the picture now.
Yeah,
we're recording this. Peter's wave counts are so good, you're going to have to watch this again. Your view on crude, I believe, was pretty negative once we got into the 50 range, and I think you're also negative Canada. Is the loonie frustrating you at all?
Yeah, because it's retracing it. Yeah, this is oil. So oil is headed down eventually under $25, but we're in a triangle right now, another triangle. So here's our triangle, a great big fourth wave triangle down here at the bottom, and it is going to retrace eventually. It's got a D wave to do, $32, then it'll go back up to about $40, and then it's going to come down to 25. And the Canadian dollar, since you mentioned it, I just sent out an email to my peeps this morning on the dollar. Well, I know I got to find one of these charts. Yeah. So this cleans it up a little bit. So the Canadian dollar, again, is in a retrace. Here's a great big third wave up. There's my big circle 3 there. Sorry, every time I do a new resolution, these numbers move around, so I have to be careful with them. But again, this is the same principle. It'll retrace in 3 waves to the previous fourth wave. So here's the previous fourth wave at 1.19, and it's done an A wave. It's doing a B wave, and today I said, well, it looks like it's going right back down to the 1.36 here, and it's going to do a test that, and then it will finally head up in its C wave. So that'll be the same, at the same timing, I believe, as the final blow-off wave in the U.S. market and the dollar heading down to its 92 range.
Yeah, because it sure has been holding up with overall dollar weakness across the board.
Yeah, that's right. And all of the currencies right now in the last few days are sort of repositioning to get into their final C waves. I mean, you can look at the Australian dollar, you can look at the pound. The pound is the odd one out, and the pound looks like it may be headed back. It has to get back up to 1.52 here eventually.
Wow. That's even more bullish than some of the numbers. We were thinking maybe 135, 140, but you're thinking 52.
62% is right there.
Okay.
And then it's going to head down in a great big third wave. So a big C wave, because this is a again, corrective wave, an A, B, C wave. So it's got to get back up there to 152. And then
all right. Well, I'm not going to short the pound for the next 8 months.
No, don't.
All right, buddy.
I don't know if it's 8 months. I don't know if it's 8 months. It might just be 5 months. This thing might move quick. Moving pretty quickly right now, so we'll see.
So, Peter, you've given us some great looks and levels and projections here in 20 minutes, great roadmaps. I'd like to spend the last maybe 10 minutes of you talking about what you see the outcome. Some of the things that you talk about are so interesting. People talking about global warming, while Peter Temple is talking about global cooling and a possible mini ice age. And, your market stuff is great, but your long-term historical stuff and, Wheeler and all these guys that you study, it's really fascinating. So here's a little bit, I've seen this before. This is his climate and how the climate changes affect the market. And then maybe even a little bit of solar activity, which probably plays into it, is the sun becoming less active, also part of this climate shift that you see happening from a modern warm period, which is normally bullish financial assets, to moving into a cooling period.
Okay, so that question was a 4-minute question, and you want me to cover this in 10 minutes.
Oh, no, okay. Well, you can go as long as you want, you know.
All right, let's get it. I'm kidding, Dale. So we're just, so here's a chart that goes back a couple of thousand years. So actually it goes back further than that. It goes back about 4,000 years, because here we are at 2007, if you can follow my pointer way down here. And this is a temperature chart showing temperatures going way back 5,000 years. And so you can see, and I'm a big cycles guy, you can see that these temperatures go up and down, and that it's actually been warmer, if you can look at these arrows, red arrows, previously. So here's 500-year span going back here to about, actually that's a 1,000 year. Sorry, these are 1,030 years distance here. So we've got 1,000 years going back to the year 1000, which is, they call the medieval warm period. It was very warm. You go back another 1,000 years, you get the top of Rome. That was in 0 AD, actually about 100 AD. And then you go back to the top of Egypt. So you can see these big spikes. And if you were to look at rainfall, you would find that rainfall sort of follows these. So very nice weather or climate on the Earth creates these civilizations that have their peaks right at the top of these temperatures. So here's Egypt. You can see Greece, which got taken over by Rome. And here's the top for Rome. You can see the Mayan age right in here, where we had another 500-year peak, and 1,000-year medieval warm period, which was the Viking age. And now we're at the U.S. age right now, and of course it's going to start to head down because we're at a peak. And so with each one of these peaks, this is 1,030 years, you have a great big financial collapse. You can see this, what happened with Rome. I mean, Rome, that was the peak in 0, and then it headed down over about 500 years. And then we had Trump's wall right at the bottom of it. So you have all of these interesting things that happen over and over. And if I go to these, so you get, let me just follow that up by saying the cycles are, what's the word I want, harmonic. And you can divide by 3 and get the next lower one. So 1,030, actually by 2 this time, you get to 500 years, which is a major cycle turn. Then harmonically, divide by 3, you get 172 years. Each 172 years, which you're seeing spikes in here, also leads to a collapse. But when you get larger cycles on top of smaller cycles, the collapse becomes that much bigger. And in fact, we are looking at, if you were to look at the stock market from 1950 or so, you would see that we're in the largest bubble in history. And so I talk an awful lot about that, and all the bubbles collapse. So we're going to have a large collapse. The interesting thing I think about this is that when you plug in some of the things that actually happened with these, you overlay them with these temperature rises, we always have international wars on the upside as the temperature gets warmer. And of course, you can look at Vietnam and Iraq and all the wars that we've had over here. And we have civil wars on the downside. I believe the U.S. is headed for a huge civil war, and it's going to be pretty devastating. And you get them on the downside of Rome. I mean, Rome started to fall apart because all of the different countries that had overtaken started to have wars within each other, and it fell apart. So you get the highs, and up at the top here, I have JC1 and JC2. Well, you had Julius Caesar and you had Jesus Christ. So you tend to get these people that start religions. That was, of course, Christianity. You can go down to the next peak, the Mayan peak. It had Muhammad, and that was Islam, and Justinian, which was a whole new empire, the Byzantine Empire. You had the Norman conquest up here. So it's interesting as you follow these, and the Renaissance down at this high down here, which was a 172-year high, and the printing press, and a guy named Henry VIII, which is, I believe, Donald Trump reincarnated. And if you go to my website today, you will find that on the front page I have the story about how Henry VIII is just the same situation as Donald Trump, same kind of guy. He was a populist. He had 6 wives. Trump had 3. I mean, it just goes on and on and on. And
didn't you also make some type of even more modern parallel?
Yes.
To Hoover?
Hoover was a populist president. And if you go back to the 1920s, of course, we had lots of inflation that happened, and the dollar started to go up in value. But the Fed, which had just come into power in 1913, started to raise interest rates. Another reason, it was another reason they did that from the current one, but that, of course, created the collapse, and the collapse happened about 8 months. Was it 8 months after Hoover entered office? We had the top. It was either 3 or 8. I can't remember. But he came in, and of course, his problem. He was a guy who was a populist president, and he had companies all over the world and interests all over the place. But his problem was he could not communicate with the people, but he could communicate on a higher level with the people around him. Trump is the opposite in that respect. He is able to communicate with the people, but he's not able to communicate at a higher level with the people around him.
So history doesn't repeat, it rhymes.
History rhymes. And so you see these things as I go back through history, you'll see these cycle turns happening, and the same sort of people bubbling up to the surface at certain times. So it's not the people that create the history, it's really the cycles that create the opportunities and the history, and these people pop up and just fulfill that role. So it's fascinating stuff as far as I'm concerned.
Well, I don't know what cycle brought you and I together a year or so ago, but I'm thankful for that cycle because you know, besides being a very good market timer, Elliotician, your research is phenomenal, Peter. You know, I read your blog when it's sent to me on Sunday night, and I'm always, you know, want to make sure I have time before I go to work and run the live room that I could take in all your hard work and research, and you're so passionate about it that I think you're a must follow. And a must follow is at World Cycles Guy, Peter Temple, and that's also the name of your website, correct?
WorldCyclesInstitute.com, yeah.
Okay, and you are taking everything you say to heart. You don't live in a dense populated area where people are going to be a problem when some of these scenarios that you talk about begin to manifest, and you're advising people how to prepare. You're a prepper because of what you see.
Not exactly. Actually, I live close to downtown Calgary, Alberta, Canada, but I'll tell you, I can walk to water from where I am, which I think is very important, and it's mountain water that comes out of the mountains, so it's fairly fresh. I worry about people in places like Toronto and New York and Chicago, and you know where there is New York particularly, because I was just down there, and because as I walked through the streets, I thought, man, this is going to be a mess once you know transportation gets cut off, and once everything crashes, it is going to be a problem. Yeah, so,
because we have this system for stocking grocery stores and everything else. It used to be they would keep inventory, but now it's like inventory on demand. They only replace it once it's gone. So any type of interruption. I have to leave it on one more note with what's happening here geopolitically. What's your work say about what's happening with North Korea, what's happening with Russia, and what's happening with China?
Well, this gets into a bigger, I look at this from a financial perspective. I think that this revolution is going to be a financial revolution, and this goes back many years to the problem that we have with our financial system. It started in 1694 with the Bank of England creating interest, and this goes to the, I mean, you're asking me a question which is, it's got a very complicated answer to it, but it's interesting to note that there are only a few countries on earth that have not aligned themselves with the central bankers out of Europe And of course, the central bankers in Canada is the same way. You have the Fed in the U.S., which is a private bank. The central bankers in Europe are a private bank. And all of the G8 countries have aligned themselves over the past, at different points over the past 100 years, with these central bankers who now create the money that these countries could create themselves, and they create it out of nothing, and they charge these countries interest rates, and that's why all these countries are going bankrupt, to use this money which they create out of nothing, which Canada used to do actually before 1974, which again goes into kind of a long story, but I look around the globe and Russia right now is trying to create their own financial system and get away from these central bankers, and so they're vilified. Syria is one of the countries that had their own financial system. Libya had their own financial system before the U.S. blew it up. There's a number of them. North Korea has got its own financial system, and they're not aligned, and so they're being vilified. Now, there's other reasons there for that, and Iran is another one, has their own financial system.
So you're saying it's all about U.S. hegemony?
It is, yeah. It's about money, and this goes back to these central bankers. It's always about money being the root of all evil, and this is going back again. It goes back to the history, and you go back to, again, Jesus Christ, and that was throwing out the money lenders. I mean, these themes go over and over and over again at the tops of these, and you go back to Henry VIII at the top of his cycle. He was all about getting away from taxes from the Roman Catholic Church. It was all about money, and so, all of these peaks at the same time, you have all these money lenders that are creating havoc and bankrupting people, and you have these major revolutions.
So Ecclesiastics, there's nothing new under the sun.
Absolutely. Yeah, it all happens over and over again. History wrong.
Thank you so much, Peter, for being with us today. And again, I encourage people to follow Peter, and you can find him. You don't do a lot on Twitter, but World Cycles Institute is the name of the website. Is that correct?
That's correct. Yeah, .com.
Right.
Dale, I have to do more on Twitter. I mean, you're a model that I have to start to follow that way, I think.
Yeah, you'll pick up followers that way, Peter. And thanks so much for sharing roadmaps. And I wish you all the success for all your hard work, that you're rewarded and people appreciate you. So it was great talking to you, my trading warrior brother.
This is, I don't know that this is work.
Okay, yeah, you love it. Okay. I know. It's so continued success with your play.
Thank you very much, and thanks for all your support, Dale. Really appreciate it.
All right, my friend. That's Peter Temple, everybody. Thank Peter for coming here and sharing some great stuff. This was recorded, and you'll be able to play over his roadmap. And that's going to be a wrap up for me. I hope that everyone's had a great session here. It was not a real active session. We know we got some nice targets from Peter on different instruments. 152 is even more bullish than what we heard from Blake on cable. There's going to be an opportunity to buy gold cheaper, so we could be looking for shorting opportunities, and the stock market could have legs into the fall, and the dollar's going to go down with it. So that's a wrap for me. Thank you, everyone, for your support and attention, and I'll see everyone tomorrow. Most of all, remember, don't just count your pips, count your blessings, and get prepared. You're very welcome. See everyone tomorrow.